Welcome to TS Lombard. It's that time again. An ECB meeting is on the horizon. What can we expect? I think it's an important meeting for a number of reasons, in particular because the ECB told us in April, in the account of its meeting, that it would use the upcoming meeting and the review of its projections to take stock, to reassess. And obviously from a financial market perspective, the key issue is, will the ECB give us any signal that it's moving towards a less accommodative policy stance? Any signal, for example, of a tapering of asset purchases? We've thought for a while that this meeting will give us some indication that the ECB is moving in that direction. What can we expect to see? First of all, on the growth side, it should sound pretty positive. Most leading indicators are improving. There's been some gap between the leading indicators and the hard activity data, but we think that gap will close over the period ahead. In particular, the market will be looking at whether the ECB is changing its risk assessment. I think it's probably likely that they will. They will say growth risks have become more balanced. Probably global factors still leaning perhaps to the downside, but in general the message should be pretty positive. It will probably be different on inflation. The core rate of inflation is the ECB's focus. They've made that absolutely clear in their communication for some time now. And the message to date has been they still don't see a convincing upward trend in core inflation. And based on recent data, that hasn't really changed. So while we expect the ECB to sound pretty bullish on growth, when it comes to inflation, the message should be much more cautious. What then about the signalling on the exit strategy, the sequencing, and so on? Could we even see, for example, a shift in the forward guidance to signal that the bias to ease is no longer there, no longer appropriate? I think probably at this point that's unlikely. Why? Well, because the inflation side of things hasn't changed that much. Wage growth, which is the linchpin of core inflation, according to Mr. Draghi, that still looks pretty subdued. And what we're seeing is financial conditions, particularly through the exchange rate channel, have started to tighten. So I think Mr. Draghi has a dilemma really. On the one hand, he has to reflect the improvement in economic conditions and probably the fact that the internal debate at the ECB is shifting towards considering the exit. But at the same time, he doesn't want to push the exchange rate more quickly upwards and tighten conditions further. So at this point, we think it's too early to remove the bias to ease. But it is reasonable, I think, to assume that the bias to ease will go. Why? Because how likely is it that the ECB, for example, would lower policy rates from these levels? It's very unlikely. What about the discussion on exit? Well, this is moving, I think, internally, maybe less so in the communication to date. If there's a question at the press conference, did you discuss the exit strategy? I think probably for the first time we may hear the ECB give an indication that that's happening. Again, a rather cautious indication, but perhaps some suggestion that this is something that the ECB is beginning to consider. Certainly the more hawkish members of the Governing Council will want to make their voice heard. They think the policy stance is increasingly out of kilter with the economic fundamentals, and we have some sympathy with that view.